I'm Charlotte McLeod with investingnews.com, and here today with me is Lynette Zang, founder and CEO of Zang International. Thank you so much for being here. Always great to have you in person.
I know. I love it when we can get together in person, and thank you for having me.
Yes, of course. And we're here at the Rural Symposium. We've made it a couple of days at this point into the event. So I wanted to start by asking you about conversations you've been having on the show floor, any key takeaways that you would want to share.
Wow, I'll tell you what, the crowds have been amazing, and there are a lot of key takeaways, and one of them really is how open people are to new ideas, which is really kind of unique these days because people have gotten so polarized. And I mean, the brilliance of the speakers here are phenomenal. And I also think what's quite interesting is Grant Williams, he did the first kickoff keynote, and I'm doing the last one, and it's kind of like a bookmark because he did talk about a number of things that I also will be talking about, but from a completely different angle. And so I think everybody's going to get a really nice full picture of these really important topics because we're in a very precarious position right now in the world.
I've been hearing a lot of fans of the Grant Williams presentation. Unfortunately, I was in here filming, so I'll have to look it up later and see. But maybe we can talk a little bit about your topic that you'll be wrapping up the conference with. So I believe the title is Create, Debase, Replace. So
Absolutely.
I'm hoping we can get a preview and hear a little bit about what it's about.
Well, it really is about how governments and central bankers make the transition from one monetary system to the next monetary system and just get everybody to go along because they don't really see what's happening. And what's really happening is they're pulling us further and further away from sound money, and I'm referring to the public. And that is critical because if we don't do something about getting sound money back in the system, which you and I have been talking about now for years, then we're going into a full surveillance system where you will have no choices because any of your earnings will be immediately deposited. So however the bank wants to treat them, because they're not yours once they get deposited, and the ability for central banks to charge negative rates. And that's not okay with me. And I actually brought a sample, and I'm going to give this to you, and anybody can have one.
Oh.
This is our paradigm shift card. And on the left-hand side is a dime that was minted prior to 1965, so 64 or earlier, and it's silver. It's 90% silver. On the other side, it's a face value dime. It just has, they're both dimes, but it has no metal in there, just base metal, right? So on the day that we happened to buy this dime, our cost on it, this was April 24th, the one I have in my hand, yours could be different. And that one dime cost $5.60. Now, the kind of interesting thing about it is I bought a cup of coffee this morning, and I charged it to my room, and it was pretty close to the amount on this dime card. But could I have gotten that cup of coffee with that dime? No. So they're both dimes. It's a paradigm shift. And if you call us, you know, the first one, if you're a client, the first one's free, and you can have as many as you want because we're trying to build an army, right? So if you've never held sound money in your hand, you can see the difference now.
Well, I always love the visual, and I think holding it really, really helps.
Absolutely.
And you're right, we have been talking about how dangerous this situation is. I wanted to bring up CBDCs, which I think is related to the conversation.
Absolutely.
As well as the Clarity Act. So it's making progress through the U.S. government. It includes a ban on a CBDC from the Fed, at least until 2030. So how significant is that development? How does it fit into?
Honest to goodness, last summer, President Trump signed the Genius Act. That was the first legislation for stablecoins, for the digital currency. And so what's in a name, right? I mean, they call confiscation, people think, well, that's only if they take something away from you overtly, but there are all different forms of confiscation: taxation, price manipulation, et cetera. And I would say it's the same thing with the digital currencies. They know how to make this happen, and I think you and I have even probably done this little exercise before, because they create normalcy, right? I mean, first, we had the $20 gold coin, that's an ounce of gold, and that was our money. Then they came out with the $20 gold certificate. This is a claim on this money. And I could walk into a bank, if I didn't like what the government was doing, I could walk into a bank with this and walk out with that. So it forces fiscal responsibility because citizens held sound money outside of the system. But then they also came up with, here it is, this. And when you look at it, tell me what's the difference between this and this? There's two differences, and they're key, but they don't look very different, do they?
Oh, yeah, we've got the gold certificate there. Yeah, and let me see if I can figure the other one. What do we have? I am not.
See?
Yeah, I'm not
so
good at this
glad
spot
we
the
did
difference.
this.
Yeah,
Here's
tell
the
me.
difference. On the top, it says Federal Reserve Note.
Oh, yeah, you can.
So this is a debt instrument, and you just proved my point, right? For 20 years, the three of these went side by side, all with the same face value. So people thought there was continuity when they took these two things away. They still had this. They're not the same. This is sound money. This is a claim on sound money, and this is a promise to pay. And I'm sorry, promises can be broken, right? And so thank you very much, because you talked about the CBDCs. Well, I don't think, and this conversation we've had a few times, but I do not think that it was a coincidence that Bitcoin was born in January of 2009 and quantitative easing was born in March of 2009. Because when one system dies, another one is presented as the solution. And they have to get that normalcy. They have to get adoption. And the way that they do it, think about the Roaring '20s. Think about the greedy '80s. They allow the public to feel richer for a while, right? And then they just go along with it. And then they pull away your ability to protect yourself. Because even with this crap that loses value through inflation by design, you still can hold it outside of the system, right?
Yeah.
Once we are fully digital, if we allow them to pull this off, because this is a choice, and I really do want everybody to determine whether or not you really are okay working for corporate debt. Federal Reserve Note. Note is a promise to pay, right? So did you realize that and whether it's US dollars or Canadian dollars, it doesn't matter. They're all the same. They're all notes, right? They're all promises to pay, and they're corporate debt. So the first thing you say is, am I okay working for corporate debt? It's not okay with me. I have to, because this is our system, because we've adopted it. But I say, let's get redeemable gold sound money back in the system again, because that forces fiscal responsibility. And when the public can hold sound money outside of the system, and that's really what the dime cards show, right? That's exactly what they show. And if we can get redeemable gold back in the system, then the public gets to take back their power. What a concept.
I think this was a very illustrative example. So thank you for bringing all of the props as usual. And I wonder, we've talked about this before, how people on a personal note can bring hard access into their life. I wonder, on that government level, how can people work toward making it happen that way?
That is a really good question. And really, the approach has got to be from the bottom up and the top down. And so all you really have to do is convert this stuff that's being inflated away, the garbage, into sound money. And I believe that if we can get 3% of the global population to do it, then we can force that to be part of the new system. So they can call, there's lots and lots of dealers out there. Or we have our sound money strategy. That's based on repeatable patterns because I've been studying currency and currency life cycles since 1987. And I know we're at the very end. So just buy sound money and talk about it and call us or go online and ask us for a dime card. You know, if you're a client, the first one's free, the rest of them is at our cost because we're trying to build an army and create a movement. And that's how you do it. You just start to participate. But you go locally as well. You know, Charlotte, I've never been very political, nor did I ever think I would ever be political. But there is a quote that is very applicable, which is, you may not be interested in politics, but politics is very interested in you. And so I think it is also, I'm starting to learn how, I don't know how to do this, sorry, can't give you better information, but the second Monday of every month at 3 o'clock Arizona time, we do our Sound Money Hour. And we're inviting on stage lobbyists and politicians and people that have worked in the industry to teach us how to approach the local politicians because they don't understand sound money either. And so we have to educate people and start to get, you know, states and different areas to adopt sound money in their systems and legalize it again because it's unconstitutional to be on this stuff. And I don't want to work for corporate debt. I don't worry about that so much for me because I'm old. But I have grandchildren and they're going to have children and you're young. And so it's for everybody else that we really have to make this fight. So just be vocal. It took 3% to create the Revolutionary War. Not 100% of the people in America, just a vocal 3%. So convert your garbage into sound money and talk about it.
I think that's great advice. And I always like when you say, you know, I don't know how, but I'm going to learn how to figure it out. So I think it makes a lot of sense and could inspire people to do the same thing. At this event, I think there's a lot of people who embrace what you're talking about. They feel the same way. But it's really interesting because at the same time, I do see when it comes to gold and silver prices, concerns about the lower price levels that we're seeing. And I know we talked about this earlier in the year, and you tend to remind us when we speak about the prices, these are the spot prices.
Exactly, that's a contract.
But I wonder what would you say to people who are feeling this way? Maybe you can contextualize these declines we've seen in the prices.
Oh, absolutely. Because we are at the end of the currency's life cycle, and you don't take my word for anything. You know my favorite website is the FRED, F-R-E-D, which is the Federal Reserve Education Department. So go on there and look at the purchasing power in the search bar, put it in, it'll come up. Purchasing power of the consumer dollar. And you will see that out of that original dollar's worth of purchasing power, we've now broken 3 cents officially, and we sit at 0.029. Okay, so this is very important to understand. So do the governments and central bankers want you to understand that the system is dead? I say it's at the end of its life cycle because what happens when you get to zero in terms of purchasing power? And we're close to that because it's about confidence. So they have to suppress the price, but I didn't bring my money gun today. I will have it on Friday. But it's all of the money that they've created, especially since 2008, which is really when the system died. And now what we have is it's all about the flow of funds and trading, okay? This is not an investing market. This is a gambling casino market. And so with all of this money that's sloshing around and these contracts, it is so easy for, okay, there's momentum in the spot gold and silver contracts. Let's rush in there, and they pushed it up. It doesn't mean that gold and silver is not worth that amount of money. I'll come back to that in a second. But it's that flow of funds that pushed it up too fast, too far. And then, ooh, there's SpaceX is coming, right? So it is all about the sloshing around of the funds because this is not an investment market, this is a trading market. And this is what happens every single time at the end of a currency's life cycle. So I know not to believe the lie. We were taught that Wall Street is supposed to show you what's happening in the real economy, but it doesn't, and it hasn't for a very long time because it's a transfer of wealth mechanism. It's not really reflective. So don't believe them. What you can believe is that's a gold certificate, how is this crap created? Debt. So if you really want to know the true value of an ounce of gold and silver, which you need to know that for anything to know whether it's undervalued, fairly valued, or overvalued. Therefore, do I want to buy it? Do I want to hold it? Do I want to liquidate it? So you just have to go to the source, right? If this is created from debt, you can look up all the debt in the world. I don't know how accurate it'll be, but it'll be closer than just a random guess. And with gold, there is a finite amount of it, whether it's been pulled out of the ground or it's still in the ground. So you just divide all the gold by all the debt by all the gold, and that gives you the true fundamental value, which is somewhere around, I don't know, 38,000, 40,000. So at $4,000, it's a bargain, okay? And that would be the same thing for silver. It's really worth somewhere around 1,800. So at 60 or 70 bucks, it's a bargain. If you know that something is a deal, do you just avoid it when you go to the store? No, you load up on it, don't you?
Exactly.
So that's what I would say. Thank Wall Street very much, because what are the central bankers doing? Buying the most gold ever in history. Well, who knows more about what they're doing to this garbage than them?
Yeah, and I think that's a point worth pursuing as well. I've been hearing a lot over the last couple of days about not only central bank gold buying, but the fact that they are moving away from the treasuries. So anything,
absolutely.
Anything you would add on that we should know about?
Oh, I can add quite a bit to that. Actually, you'll see the same kind of behavior that happened in the 60s as governments, even though the public could not redeem dollars for gold anymore, foreign governments could. And they started to do that. It peaked in 48, and first it was kind of a slow trickle, but by 1960, it had gone negative, meaning that the US, there were more claims against the gold that we had than the gold that we had. If you look at the trajectory of that sale, or that conversion, I should say, you see a run on the dollar that the public didn't see, but foreign governments did. I see exactly the same thing with treasuries starting in 2013 amongst our biggest buyers, which are China and Japan were the biggest buyers of our treasury bonds. And when you look at it, they didn't just suddenly stop buying our treasuries. That started in 2013. So there's already a run on the dollar. The stable coin is perhaps an attempt to create another artificial market for dollars because they're backed by dollars and backed by treasuries. So now, just like it was in 1913 to 1914, where they converted sound money into corporate debt, the stable coins can be issued by Amazon and Visa and MasterCard. So tell me the difference between a corporation manipulating you or a central bank, which is also a private corporation manipulating you. Different name, same goal. None of it good. All for the corporations. How do you like this K-shaped economy?
Yeah, not very much, not very much. I want to bring up another point that I've been hearing in terms of concerns about the gold market. I think people are seeing the Iran war, and it's actually pushed the U.S. dollar higher. Of course, it's relative, but
exactly. So exactly to your point. Oh, the treasuries, the interest rates on the treasuries have gone up, so the spot gold contract goes down. Now, this is free to anybody to use it. Stock charts, this is stockcharts.com. And you can go in to do a relative performance chart. So you pull up spot gold and you pull up the spot dollar, and you can look at them relative to each other. Now, they were designed intentionally, this is not my opinion, this is a fact. When they created the spot market in the 70s, they said that their goal was to create a large enough paper market to discourage people from holding the physical, because now they could hold the contract, right? And that's really what's happening today. But if you look longer term, short term, yes, you see if the dollar goes up, you'll see the spot gold contract go down. But they're still printing debt, aren't they? And so that means that that fundamental value, that 38,000, is actually higher. The more debt they grow, the more true value this stuff has. And so you might say to me, but Lynette, the spot market. Well, it started in January, I noticed it, in January of 2025, where all of a sudden affordability matters. Supply and demand is mattering more. We're seeing the premiums in the East, right? Yeah. Because the spot markets, well, they did what they were designed to do. They created a huge paper market and a much smaller physical market, except what people also miss. This goes to everything. I counted 36 different physical users globally of physical silver and 33 different users of physical gold globally. That means that these two, sound money, have more functionality and more demand. And if demand goes down a little bit over here, it goes up over here. You look at this stuff or cryptos, how many areas are they used in? What is their functionality? So they get you to work for what they're controlling. Work for their debt. That's disgusting to me.
Yeah, you put it very well. And I know I've got to start wrapping it up and get you back out onto the show floor. But I wonder if you can talk a little bit about the path forward. So you've identified some of the signs that this currency life cycle is coming to an end. Can you walk me through how does this play out? And I know that's a big conversation, but I think it's hard for people to conceptualize.
It is hard to conceptualize, which is why I work so hard at my craft to get better and better and better so that they can see it. But unfortunately, and I believe this has already happened, number one, we are definitely in the melt-up phase in terms of those intangible assets, right? So that is definitely an indication. Stop believing the lies and stop procrastinating. Because what we are going more than likely, I mean, this is history. This is not my random opinion, it's history. We are more than likely going to end up in a hyperinflationary environment, depression. And so what do you need to do? Well, you need to make sure you are as independent and secure in areas that are critical to sustain your standard of living. So that means food, water, energy, security, barterability, which for me is primarily silver, but not completely, wealth preservation, which for me is primarily gold, but not completely. Community has arguably, since 2023, been the most important thing that I talk about, and shelter. So you have to become as independent and self-sufficient as you possibly can, because of all of your wealth and all of your income goes into a digital system, and they tell you to jump, you will have to say how high. Whereas if you create surety in all of those 8 areas and they tell you to jump, you can tell them no. And frankly, I've been working on this since 2008 because My alma mater was Shearson, so I was watching this like a hawk. And keep in mind, too, I came into this industry in 2002 after the formulas had confirmed that this was the last leg of the dollar and the fiat money life cycle. So that was the beginning of the end. Now we're very close to the end of the end. I can't tell you exactly when. But what I encourage everybody to do as strongly as I possibly can encourage you to do is create that local community around you and create that surety. You can go to farmers markets, you can go to community gardens, and maybe you can't grow food, but you can give them a day's labor, you can learn some new skills, you can become more valuable because everybody has something to give. But then you also need to be part of the global community to get sound money back in the system. One person can't do it, I can't do it by myself. So everybody that's watching, you become the army. That's why we do this, the dime cards. I mean, I travel all around the world talking about sound money and handing out dime cards, right? Because if you've never held it in your hand, you don't know. They look the same, they're designed to look the same. The digital things are designed to look the same. Everybody's used to it. Oh, you're crazy. Maybe. But to me, I always knew it was a Trojan horse, and I started watching it, I think maybe 2010. It was about $7 a coin, whenever that was. And you might also say, oh, how stupid of you. Look at it, went to 120. I cannot support the lie. My integrity does not allow me to do that, and I can't sit on camera and say, this is a Trojan horse and this is a danger to you.
Well, I always appreciate, we talk about the problems, but also the way that we can have solutions for everybody. So,
Absolutely.
yes.
There is a solution.
Yes.
There's always a solution. We need to come together and help each other. We've been divided. No. We have to have these conversations. And I would also like to say, and I know I'm taking up a little bit more time, but we can have conversations. We don't have to agree on everything. And that is okay. That's why I share all the links for my work. Go look at it. Don't take my word for anything. Do your own due diligence, and I'm going to make it easy for you to do it. If you disagree with me, I will fight for your right to disagree. I will fight for it because we have to start talking to each other again.
I think it's such an important message in these times to wrap up on. So thank you so much, as always, for coming on to explain how you see the world. I think it's really valuable.
Thank you so much for having me. It's always fun to see you.
Yes,
I
always
feel
so
like
nice
we're
to
all
see
friends
you.
already. We've been
Yes.
doing this together for
Yes,
so long.
I always enjoy it. So we'll look forward to the next time and to your presentation at the end of this event. I'll be there.
I'm so excited.
Yes.
I really am. I have a big mouth, right? So I have a tendency to go, I do believe that this is the best work I've ever done.
Wow. Okay. All right.
So that,
All
that
right.
says a lot. Jacqueline can tell you that's not something that comes out of my mouth very often at all.
Well, the anticipation is strong in that case. We'll see you there on that day. And for now, once again, I'm Charlotte McLeod with investingnews.com, and this is Lynette Zang.